What's up guys, Mo here, welcome back to another video. So in today's video what I kind of want to do is go over a quick case study that I've kind of done on NZD USD. I want to show you guys a kind of a distribution that I was able to catch, and I want to show you guys how I'm able to kind of mix in the Wyckoff concept with the smart money concept and just the different types of manipulation that you're going to see in the market for me to be able to catch this beautiful sell move that I was able to catch. Now I'm going to be going on different multiple time frames and showing you guys how it went from all the way from the top to the bottom. Okay, now before I start really quickly, I want to announce guys that the app is finally out. The whole platform's complete. You can go ahead and download it on the Android Play Store, and you can also go ahead and download it on the App Store. So if you guys are interested in joining our team, make sure to head on to fuacademy.io. Because we're celebrating the launch, I'm going to be releasing a code right on the screen. It's going to pop out right there, so make sure you head onto the website and make sure you avail of that code, because it's only going to last for around a couple of days from when this video is being released. Okay, so let's get right into it. Now, one of the first things before I'm trying to look for accumulation distributions, now one of the first things that you have to understand, okay, about an accumulation or distribution is it's just basically a range. So it's when price comes to a halt. Now to understand this, you must first of all understand how the price cycle moves, and really quickly to draw out the price cycle for you, it's basically price action either doing two things. It's either trending or it's consolidating. It's either trending or it's consolidating. Okay, a trend, a consolidation, a trend, a consolidation. And now all of these different consolidations right here have different names. Okay, so for example, you'll have your accumulation down at the bottom right here. Okay, you'll have a reaccumulation, okay, once it occurs right after the trend. Then at the top right here, at the top of the reversal, you have your distribution, redistro, etc. Now, when we look right here at our price action right here, and this is kind of distribution that I want to point out to you guys, you can see right here how price was trending. Sorry, one second. You can see how price was trending right up here. Okay, and then boom, lateral movement starts coming in. Okay, so price is just going horizontally and it's not making any moves at the start of the phase especially. Okay, and basically what's happening in accumulation or distribution, all it is supply being turned into demand by the smart operators, okay, which is basically another word for smart money or the big institutions, okay, and or demand being turned to supply or supply being turned into demand. Now all they're doing at the top here is they are selling their positions. Okay, they want to distribute their positions, they want to get rid of them, they want to sell it to basically retail traders or weaker hands, okay, the weak operators, to get rid of their positions, to get rid of their contracts, to get rid of their stocks, and for them to be able to drive price downwards, and then they'll get in again, okay, at a more discounted price. Okay, they'll find demand right here and they'll be able to get their positions at a cheaper price. And now when we're looking at a distribution, I'm not trying to find or I'm not always trying to look for the pattern or try to look for the schematic. I'm not trying to force it. All I'm doing is I'm looking at my higher time frame, and first of all, the first thing that I want to always see is my point of interest being hit. So on the weekly time frame right here, here's an example that I would have on the weekly time frame on NZD USD. For example, if you take a look right here, coming up to this price action before our consolidation was occurring, before we even know it was a distribution, okay, price started obviously trending very volatile towards the upside, and you can see we had a lot of imbalances right here, something that we wanted to get filled in. Now the main thing right here that I had was this institutional candle on the weekly time frame, which I wanted to get hit. This is the thing, I'm not looking for a distribution, I'm not trying to guess where it could potentially happen. I'm first of all waiting for a point of interest to be hit, okay, and then I'm going down to my lower time frames and trying to see if we have any horizontal movement, if we have any distributions, if we have any accumulations, where then I can snipe my entry. Now a lot of people, when it comes to Wyckoff, they're trying to really mix and match all these different terms, trying to make that schematic to the absolute perfect T. No, really what you have to understand is just the manipulation behind it, why it's happening, what are the smart operators doing, what are the weak operators doing right here. Okay, so when I drop down to my daily time frame, this is where you can kind of start seeing it. Now I'm gonna prefer going over my distribution right here. Now when we take a look at it from this perspective, I am going to go with my replay tool, okay, and this is what's going to start occurring. I'm going to start looking at it right from here. Now, a big thing when you're going to start coming up close to that point of interest, or when you're coming up to a resistance, okay, usually what's going to happen is price is going to start kind of slowing down. You can see how price was moving up quickly, and start to slow down here a little bit, okay. And this is when slowly the manipulation is going to start happening, and constant pushes, liquidations of highs, etc. are going to be occurring, okay. So we play, and then boom. Okay, so this is one of my first things that are going to happen, is my point of interest going to get hit. And most of the time when your point of interest is going to get hit, you get some sort of reaction. Now sometimes, okay, you don't want to get in right on that point of interest, because realistically, if you try and get in on that point of interest, there's not much confirmation there, okay. So you don't want to just enter just based off that institutional candle, because first of all, you have no breaks of structures, nothing. So this is why you will wait and try and get a more high probable entry on that lower time frame, instead of taking your entry straight off that higher time frame, okay. So, and a lot of time, like that, a sell could have been 100 pips. You don't want that, okay. So I'm gonna wait here, and I'm gonna wait for price action to do its thing. Okay, so this is one of the first things that you want to look at right at this area. So first of all, here you get your PSY. Now your PSY is basically the first level of interest where you're starting to see sellers coming into the market, okay. Sellers are starting to come into the market right now. This is the first sign in phase A that price could potentially move downwards. Now in today's lesson, I'm not really going to go over all the different terms of Wyckoff, stuff like that. That's all going to be covered on the course, going into detail on every single event and what occurs there and why it occurs there, okay. But the point of this video today is to kind of go over more of the top down analysis on how I made my Wyckoff trade right here. It's a mini case study on NZD USD, so I'm not really going to go over it that much, okay. And then obviously you have your BC, boom, your ST, your sign of weakness, which you could argue be here. I'm gonna actually mark this out. I wasn't gonna mark this out, but I'm just gonna mark this out for peace of mind. Okay, or PSY. BC or AR. Okay, your automatic rally. So instantly, okay. What your buyer's climax right here does is just an influx of buys, okay, buy positions, tricks people to kind of potentially move on the upside again. And then your automatic rally is an instant, and usually with your automatic rallies, you're going to get large volume, especially if you go onto your volume indicator, and you're going to see large volume occurring right on that area where you have your automatic rally. It's just basically an instant push down after that buyer's climax, okay. And you'll usually even see that in your accumulation phase as well, right after your SC, okay. So fast reaction right after your buyer's climax occurs, okay. And then now we have our range, obviously right here. You have your resistance levels, and this sets the low and the high. Your sign of weakness usually will set the low and the AR, so we don't have a sign of weakness right here, okay. And now here's the thing, remember, sometimes Wyckoff is not going to play exactly to the T, and remember there's many different distribution schematics. I believe there's around 5 to 7, okay. So sometimes it's not always going to play out exactly like the distribution schematic one. Sometimes it's going to play out with price is just going to make its uptrust, and then it's just going to make an LPSY, okay, just a straight test on that uptrust, and it's going to drop down. Sometimes it doesn't do that UTAD and has no test up there, okay. So this is why you kind of have to acclimate to what price action is giving you right here. Now, one thing that you want to notice is when distribution is occurring, remember, all they're trying to do is they're trying to liquidate as much people as possible. They're trying to liquidate all this dumb money, okay. They're trying to get everyone on one side of the market, and they're trying to build up that liquidity, okay, right here. And you can see how people sell orders right here. They see that price is creating this resistance, okay. They're creating this resistance for the dumb money, and dumb money is starting to sell from this area, and they're constantly selling, okay. It reaches here, selling, and it's showing there's willingness to sell, okay. So we see signs of weakness right at these levels, okay. Every time it touches this area, there's willingness to sell. That's all they're doing right here. And remember, all the banks as well are doing at this level is they're trying to find the path of least resistance. So that's why a lot of time in the accumulation you'll get multiple secondary tests, and as well in the in distribution you'll get multiple secondary tests to see if there's potentially buyers going to start coming into the market at these lower levels, okay. So that's all it is. They're trying to find a path path of least resistance to be able to sell. So these multiple tests to see how strong the buyers are at these levels. Are buyers willing to come in at these levels or not? Okay, that's all they're doing right here. Once they're building that liquidity, we're going to play on a little bit. Boom. Now, once you get that break right here, you got that clearance of liquidity. My resistance right here gets cleared. My liquidity gets smacked. My high gets cleared right here, and we also get our liquidation right here on the daily time frame right here of this high. So you can see now once the liquidity gets cleared, okay, once everyone in the market gets taken out at this area, and remember there's multiple different types of traders right at this level. Okay, some people are in their sell positions right here. Okay, there's the smart traders would be in their sell position after they notice that break of structure right here, blah blah. So these are kind of the smart traders, the dumb traders. Then some of them would be in their buy positions. Okay, and then they'll get scared right at this breakdown right here. Okay, and they just can't hold price. They can't hold price anymore, so they'll get out. There's multiple traders that the banks are trying to take out of the market. It's not all just sellers at one area. Remember, people are doing multiple things at this level. Okay, so once that liquidity gets broken, boom. Now what I'm doing right here is I'm waiting for that break of structure on the lower time frame. Now once we get that 4-hour time frame, I'm still letting price action do its thing. Okay, at the moment we are just in phase B. This is my up trust. Okay, and I'm gonna let price action do its thing, and then there you go. Beautiful. Okay, so right here I'm not doing anything. Once these highs get penetrated, okay, once these highs get penetrated, this is now where I'm more cautious of a move starting to happen. Right here I'm not doing anything. It doesn't really matter to me what's happening right here, as long as I can kind of identify what the market what the smart money are doing at this area. Okay, all they're doing is just distributing their orders. They're selling their orders to dumb money. Okay, once I can kind of get the gist of that and I can kind of see the schematic, it doesn't have to be 100%. My most important area is when I start reaching at the end of phase B, and especially phase C. Phase C is the area where you're looking for that entry. Okay, so this is the area where I'm looking for that uptrust or the UTAD to occur. Okay, and I'm getting on the test. Now, one of the most important things before I look to even buy or sell, okay, I need my break of structure. If I don't get my break of structure, I'm not looking to do anything. So if my test occurs before my break of structure, then I won't get in. So for example, if I got a test right here, I didn't get a break of structure on my low, so I will not get in. What I'll do is I'll wait for that break of structure. Once we get that break of structure, and remember, liquidity just being slapped right here, like there's tons of liquidity on NZD, as you can see. We have like that trendline liquidity right here. We also have lows. Look at these lows being constantly made right here. Look at the beautiful thing. How they're just generating more and more liquidity and trying to get more buyers. Even right after that UTAD, they're still trying to get more and more buyers right here to buy from the support area. Okay, and you can see how support area, this acts as an axis where it used to be previous resistance. So previous selling used to occur right here, and now previous buying and now current buying, sorry. So this is support area. Once that break of structure once that break of structure happened and that manipulation occurred, they still continue with their manipulation on the downside as well, because they're triggering more and more buyers into the market, and eventually this will get slapped. Okay, and you can see, boom, market absolutely dropped here. Now, where do you ask? You ask, where do I take my entry from? What am I doing? I'm waiting. And now a lot of time what happens is you'll have a bigger form of distribution occurring, and then once your trade is about to play out, okay, just before the drop, okay, you usually get one more distribution. This is usually the one we're focusing on, and right here I'm not going to mark it out, but you can see basically all distribution is doing is just constant manipulation on highs. Okay, constant clearance of highs and a drop, constant clearance of highs, then a drop. Okay, and once they identify the path of least resistance and they have liquidity, okay, they have reason to drop down below this level, which is obviously that big stop orders right here. Okay, these buy orders right here sitting down below here. This is the reason they want to drop down. Boom. They tap into my point of interest, or my institutional candle, which is on my daily, by the way. See my daily candle right here. Boom, filling that imbalance, daily candle touch, and away it goes. And obviously you can have more and more confirmations. Like for example, you can have your fib right here. Okay, see how this perfectly played out right here. my fib level, came up to my 786 right on the open of that institutional candle. All we did was take it from that high to the most recent low. Price comes up, creates that distribution, clears a high and an instant drop. And you can see how eventually we cleared out that beautiful, beautiful liquidity sitting down right here. Kind of see that more in the 8-hour time frame. Cleared the liquidity right here. And then look what the market did after that. Traced. So you can see initially came up straight away. Okay, so you can see how we were able to capitalize on that sell right here off that distribution. Okay, 300 pips. 300 pips. Now it might not look like a lot because realistically NZD USD made a massive move, but we were able to still catch that drop down right here just by noticing, first of all, by getting in on that initial point of interest, noticing what happens around that point of interest. Okay, then the markets are starting to distribute, then the smart money are starting to distribute their orders right here. Okay, they're basically selling all their positions to that dumb money, and then boom, they crash price down. What are they trying to do? They're trying to get price at more cheaper areas, and then you get some sort of accumulation right here once again. Okay, and now they were able to buy price. Okay, they were able to buy more stock, they were able to buy more contracts at lower prices right here, and then they pushed price up. And remember, why do they need to constantly clear these clear this liquidity, clear these lows? Because in order for you to buy something, someone else has to sell. In order for you to buy, it has to be a seller. Okay, so for example, if I have my sell pitches, if I have my sell orders right here, okay, if I have money sell orders right here, and I have my stop loss in underneath right here, okay, in order for me to get out of my position, what am I doing is I'm only selling my position back to the market. So the smart money are, what they're doing right here is they're clearing your stops. Okay, they're making that run on your stop. In order for you to sell your contract back to the market and for them to be able to buy that contract, because they need to get filled in. Okay, there won't be enough orders available. They won't be able to get filled in if they just try to place an order straight away. They'll just be a massive jerk in the market, and they won't be able to get filled in at a good price. Okay, massive spread spike will happen, and the spread's going to be massive, so they won't be able to get into the market at their initial price. Okay, the smart money, okay, they never want to be aggressive buyers or aggressive sellers. They always want to be passive. Okay, so when they make that run on that liquidity, all that's happening right here is all these retail traders, all their contracts are being sold back to the market. Same with the concept of if you were selling, okay, your order is being bought, okay, being sold to the opposite side, which in turn the smart money will buy your order right here. Okay, and then now all the orders, all the contracts have been gotten rid of right here, and now they're able to push price to where they want to. Okay, and then they're able to come back down, mitigate their order, push up. And that's just the concept of an institutional account right here. But this is why the banks cannot do anything without liquidity. They need to do liquidity, because if they don't get the liquidity, they won't be able to get their massive orders to be filled in. Okay, so they must always chase these areas of liquidity before pushing price up or down. See, they went up here, they cleared that liquidity before pushing price down. Before pushing price up, they had to clear this liquidity. So you can see constant runs on liquidity, lows being cleared by big wicks, highs being cleared by big wicks, etc. Okay, so hopefully you guys kind of understood what I'm talking about right here. Just wanted to make a quick case study on a trade that I was able to get into on that daily time frame. 300 pip trade. Now this trade alone, I didn't catch all the way down, to be honest. I was only able to I believe I took my position right around this level. Okay, so overall this trade went down for nearly 6-1, but I was able to capitalize on nearly a 3-1 right here. And now realistically, this is an 8-hour time frame, so if you drop down to that lower 1-hour time frame, it's so easy to be able to get in on a smaller trade right here. Look, very easy, because once that daily time frame candle got triggered, look, boom, massive drop, and this is where I could have gotten my scenario number 1 set up. Okay, now we have an even smaller distribution on even the 5-minute or 15-minute time frame, and you can get in. So you can see how there's literally distribution inside distribution as you go down, because remember the market is fractal. Okay, so you can see how I was able to get in on scenario number 1 setup, and now my stop loss is much smaller literally nearly 50% smaller. Now I'm able to get in right here, boom, and away you go. Sell. And remember, path of least resistance, there's literally no resistance right here, so you can see once you have impulsive movement up, impulsive movement will get filled down because it's just an imbalance. It's a black hole where price just wants to get attracted to, and you can see that beautiful drop. So you can see how now my risk to reward is at 9-1, or if I went all the way down for these lows, my risk to reward would have been at 14-1. Okay, but that's all for another video. I'm not really going to go over the smaller time frame now in this video. I usually cover that more in my course. Either way, guys, thank you guys so much for hopping on this video. Hopefully you guys gain some value. If you guys are interested in getting access once again to our platform, a web-based platform where you get access to the signals, the courses, the 5 Zoom sessions, but also our new order flow course. I'm going to be dropping a new order flow video very soon. I'm going to show you guys how you can go into these candles and see what's happening behind the scenes. Okay, but other than that, thank you guys so much for hopping on, and I'll catch you guys on the next video. Have a good day.